Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, June 27th. Firstly to the S&P 500 and very strong selling in the market continuing following the strong breakout down below the important 2040 level of the previous end of week trading. 2040 had been a very important level in the recent past. It was the bottom of this highlighted yellow zone of support and resistance and had held as support on multiple occasions in the recent past over the last couple of months trading whilst the market was trading within this large range. The market broke out through the bottom of there in a bearish manner, and we have seen strong follow-through, strong bearish follow-through for today's trading to confirm that this is a legitimate breakout, and we are very likely to see further downside. Now, we might not see that immediately. What we could see is the market bouncing off this round number 2000 where we've seen strong support coming in today, and then finding resistance at one of these levels, perhaps at the small window that was opened up today, or then a little bit higher at the bottom of that highlighted zone around 2040, and then the sellers returning back into the market. For today's candle, the sellers continue with very strong control. There has been a loss of commitment down below the 2000 level when the sellers tested down below there, but failed to close significantly down below there. One thing favouring the potential for either a retracement or some congestion around this level is the diminishing size of the black body candle, suggesting that we still have downside momentum in net terms between the open and the close, but it certainly isn't as great as it was previously, and it does suggest that the strength of the sellers is perhaps starting to wane. Also, the size of the range suggests that the sellers aren't as eager as they were previously. Importantly, the previous day's candle was an extreme candle, very large ranging candle, very large black body candle, and we don't tend to see strong follow through after extreme candles except when we have market shocks, and that's exactly what's happened for this current trading activity with the Brexit vote. It did suggest that there was a good possibility of us seeing continued further downside, but that is likely to end, and we do need to watch the market interacting with this round number 2000. The round number 2000 might be the catalyst that ends the selling. We could see strong support coming in off this level. Now, one thing to watch here, however, is that we have seen the market break out to the downside down below the Ichimoku cloud, giving us a bearish market in the longer term time frame. And with the strong bearish follow through and the market trading through some of these swing lows, it does suggest that there is some validity to this change of trend in the longer term time frame. And there is a possibility of the trend remaining down below that Ichimoku cloud, which actually starts to move higher after the next couple of days trading. So the buyers will have to be very, very strong if they are going to change the trend from this bearishness into a bullish trend that we had for the last 3 or 4 months or so. Importantly, however, the cloud does become very thin for a while, and it becomes slightly thicker, but still not strongly thicker. And there is an opportunity here for the buyers if they are strong enough, but they do have to contend with very strong resistance within this zone, extending up to 2079, which includes the thin Ichimoku cloud within it. If we look at the both the Kijun-sen and the Tenkan-sen, they are both pointing down very sharply, reflecting very strong downside momentum, as is the Chikou span. But all of the Ichimoku indicators are suggesting that there is strong bearishness in this market, very strong momentum as suggested by the Chikou span. But we are eventually going to look at an oversold market, and let's just watch how we react to this round number 2000 over the next day or so. Now, just looking at the bands here, and if you recall, we were watching the trading activity within the bands, and if you recall, there was a suggestion that certainly that strong bullish tone had ended when the market started trading within the bands. There was a suggestion that we were perhaps beginning a transition into a downtrending phase, and we tend to see the market activity down within the lower band finding support at the lower band, attempting to rally, finding resistance either at the middle of the bands or at the upper band. We broke out to the upside. Lack of follow through suggested that it was a false breakout. And then for Friday's trading, we saw the market break out with a bearish close down below the lower band. We've seen the strong negative follow through to confirm, and also the market taking out these swing lows. So we do now have a very, very strong negative tone in this market, in the S&P, in the medium term time frame. If the market does attempt to rally, looking to the lower band, trading at 2059 at the moment to hold as resistance. Next to the Nasdaq, and there has been very, very strong selling in the Nasdaq 100 index. The technology sector here has really bore the brunt of the selling, with the market gapping down on 2 occasions. A very large black body candle today, but support coming in at the 41.79 level. Down below this 41.79, we have a large zone of support that extends down to about 40.89. So if you do see the market break out down through there, we are likely to see some strong support coming in around that level. So any downtrending activity over the next few days may be limited by that 40.89 level. We are trading down below the Ichimoku cloud in a bearish manner, strong follow through after the breakout to the downside, so confirming in this market as well that we have a strong negative market. If the market does attempt to rally, looking to the Tenkan to hold as resistance, and it trades at 43.23, but we do have other areas of resistance, and the window that was opened up, which extends between 42.48 and 42.74, could hold as resistance. And then up above there around the Ichimoku cloud, another window that was open. Asset class ETFs, TLT is the bonds, the 20 plus year Treasury bond fund, and here we see very strong buying. Flight to quality away from equities certainly going on here, gapping up, taking out the previous swing high, trading up above the upper band, suggesting strong bullishness. In terms of relative strength, looking very strong, and momentum of relative strength is also strong as well, suggesting strong outperformance of bonds versus equities, and there has been a shift in capital away from equities to bonds to something of a safer haven. And to gold, the gold ETF, and even though the trend isn't as dynamic as we saw with the bonds here, we do see strength in terms of relative strength, and certainly there has been an allocation of capital to gold as a safe haven. The formation of an indecisive spinning top type candle here does suggest that there is potential for a change of trend, and that may be in line with the buyers returning into the equities market over the next couple of days. So let's just watch that very, very carefully, and it is suggesting that the outperformance may not be as strong as it was previously, certainly not as strong as we have seen the flow of capital into bonds. It has been starting to wane now, and could be the first hint that we could see a change of trend back to the upside in a mild manner in the equities market. And to the sectors, the sector ETFs, and the defensive sector, the utility sector has seen strong buying coming in. So within the equity space, we have seen allocation to this safer sector, taking out the top band in a strong bullish manner, and it does suggest that the buyers are returning here aggressively. Relative strength versus the S&P 500 has been trending up now and is above the bands, and momentum is above the upper band, suggesting that this certainly is the leading sector, and the allocation of capital into utilities has been very strong. Also the consumer staples sector, and even though the trend is down and we see the market trending down below the lower band, but not in bearish manner, so we haven't had any strong follow through here to confirm a significant downtrend. But if we look on a relative strength basis, we see that there has been an allocation of capital into this sector away from other sectors, with the relative strength trending higher and its momentum trending higher, and this is obviously a defensive play. Another sector, the real estate sector, as an asset class play here, has seen some relative strength trend coming in, outperforming the overall equities market here in terms of trend and relative strength. And even though we see spinning top type candles, certainly these candles look very much different than the S&P 500 candles. So we have seen an allocation to the real estate sector as a sector and as an asset class. Whilst the financial sector, financial services sector, has seen very strong selling, trading down below the lower bands. That selling began prior to the British referendum vote, and the relative strength underperformance had began prior to that, and significantly over the last couple of days, this has seen the trend accelerate to the downside and momentum moving lower, and suggesting that this certainly is the weakest sector in the market.